What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If you're new to our channel or if you've been checking out our content, make sure you hit that subscribe button as well as smash the like button. It helps our content reach a wider audience and we greatly appreciate the support. So for today's video, we're going to be going over one of the latest business credit builders, and this is a subscriber request. Several of you brought this to my attention, so we're going to be reviewing the Credit Strong Credit Builder account. Now, a lot of you may already be familiar with Credit Strong. They've been out several years. So they started out with a personal credit builder account. Now they've expanded to offering a business credit builder account. And it works in the same way as the personal. It's a credit builder loan. So essentially what they'll do is they'll report a $10,000 loan under your business's EIN, and then you'll make monthly payments. Those payments go into a savings account, and at the end of the loan term, you get all of your proceeds back minus the interest that you pay. So the Credit Builder Business Credit Builder offers two different options. They have a 60-month term as well as a 120-month term. So that's basically a 5 and a 10-year loan. So we recently dropped a video on some of the differences between the business credit reporting agencies. You have your vendor trade lines and financial trade lines. So the other day we dropped a video about PayNet, and PayNet is the leading business credit bureau that collects information on financial trade lines. So even though PayNet is owned by Equifax, they still operate independently. So PayNet has the Master Score version 2. Equifax has the Small Business Delinquency Score. So these are two separate score models. Currently, the Credit Strong Business Credit Builder reports to Equifax and PayNet, and they're working on reporting to Business Experian as well as the Small Business Financial Exchange. Anyways, let's jump over to their website and I'll walk you through some of the details. All right, so here we are on creditstrong.com. Now, Credit Strong now offers a business credit builder. So this is a $10,000 installment loan that's reported under your business's EIN to help you build business credit. They report to PayNet as well as Equifax. Now, there's two different options you could choose from. You have a 5-year loan as well as a 10-year loan. So let's start with the 5-year loan. So the 5-year plan is $199 per month. They're going to be reporting a $10,000 installment account. And again, this is a financial trade line. You could cancel at any time with no pre-penalty. They also have a 10-year plan that's $115 per month. And again, same thing, you could cancel at any time with no penalty. All right, so let's go over some of the most frequently asked questions. So what is a Credit Strong Business Credit Builder account? So a Credit Strong Business Credit Builder account is a combination of a commercial cash secured installment loan and a bank account. If your credit builder loan is approved, the funds are deposited into a bank account as collateral. A lock will be placed on the account for the life of the loan. The loan and the payment activity for the loan are reported to the commercial credit bureaus, building the credit profile of your business. Another frequently asked question is, how do you determine if my business is eligible for a Credit Strong Business Credit Builder account? It says we will need to verify the identity of the business owner and business. Your business must not be involved in a prohibited industry or activity. We do not perform a hard credit inquiry on you personally or on the business. So this is not going to be a hard pull on your credit, your personal or business credit. Now, I've already gone over this, but what credit bureaus do you report to? So right here, they said currently Credit Strong Credit Builder accounts are reported to Equifax and PayNet. We plan to extend commercial credit reporting to Experian as well as SBFE in the near future. So that's the Small Business Financial Exchange. So Credit Strong also has this tab, which is called Business Credit 101. And I highly recommend anyone watching this video to check out the link. It goes over some of the differences between the business credit bureaus. We went over some of the differences between the types of trade lines. You have financial trade lines as well as vendor trade lines. So let's just recap real quick. A financial trade line is an extension of credit from a bank or a financing company. For example, a business loan from a bank, a commercial credit card, or equipment lease financing. Vendor trade lines can have a variety of different names. So this could be merchant trade lines, supplier trade lines, any type of vendor account where it's business to business, usually extended on net 30 terms. This is another important fact right here. Some business credit bureaus only collect financial trade lines. Some only collect vendor trade lines, and some combine both types of trade lines. All business credit bureaus combine additional information about a company with the trade lines they collect to generate a business credit score or an assessment of the credit worthiness of your business. Now, pay attention to this as well. So it asks which type of trade line is more important. And I always say it depends on what your objectives are. So if your goal is to get net 30 terms with the supplier, you typically want to look at the payment history of vendor trade lines.
If your goal is to get a loan or a credit card for your company, a financial trade line is likely going to be more important to the lender. Credit Strong Business Credit Builder Accounts offers a $10,000 installment loan financial trade line. And here they're just going over the different business credit bureaus and business credit scores. So we went over PayNet. They have the master score. It ranges from 500 to 800. You also have Equifax, which has the business delinquency financial score. So even though Equifax owns PayNet, they still operate somewhat independently. So PayNet has the master score, Equifax has the business delinquency score. So these are two different metrics, two different algorithms. You also have Dun and Bradstreet Paydex score. So right here it says Dun and Bradstreet is a business credit bureau that collects information on vendor trade lines. Paydex is primarily used by vendors and suppliers to judge a company when determining what terms to extend on trade credit. Your Paydex score can be important if you are seeking vendor terms or vendor financing. You also have Experian Business, which has the IntelliScore. We've done several videos on the IntelliScore, another very important credit bureau. Now, they collect both financial trade lines as well as vendor trade lines. Last but not least, you have the Small Business Financial Exchange. So this is another consortium of different lenders and vendors that share data amongst each other.
All right, so let's recap the Credit Strong Business Credit Builder account. So this is a credit builder loan that reports under your business's EIN. And again, this is a financial trade line. So this is going to be reported to PayNet as well as Equifax. And they're working on reporting to Experian Business as well as the Small Business Financial Exchange. In order to qualify, your business does have to be registered in the United States for at least 6 months. And you do have to be at least 18 years of age. So I wanted to break down the cost of these two different credit builder accounts. So let's start with the 10-year term. So the 10-year term, again, you're going to be paying $115 a month. So when you calculate that over 10 years, you're looking about $13,800. Let's subtract the 10,000 from that you'll get back. So over the course of 10 years, it'll cost you a total of $3,800 in fees and interest. But when you divide that by 120 months, it's roughly costing you about $31.67 per month to have that $10,000 trade line reporting under your business's EIN. With regard to the 60-month term, you're paying $199 per month, and that's going to cost you over the course of 60 months approximately $11,940. So it's costing you, let's say, a total of $1,940. When you divide that by 60 months, you're looking at roughly about $32.33. So they're pretty comparable in terms of price. You're going to be paying about what, 60, 70 cents less if you choose the 10-year versus the 5-year. Now, to put it into perspective, there are some credit monitoring services that cost around 30 or 40 bucks per month. So I think this is decent value in the short term if you want to have a financial trade line reporting under your business's EIN. I think this might be a viable credit builder option for you. Anyways, that's all I wanted to cover in today's video. Let me know your comments and questions in the comment section right down below. And until next time, take it easy and we'll talk to you soon. Peace.